So with that, I'm going to go ahead and turn things over to Tierra Bonds. Welcome and thank you for being here.
Thank you, Jay, for allowing me to be here. Thank you, Elizabeth, as well, and everyone else at the Seattle Public Library, and also for everyone here in attendance. Credit is not the most fun thing to listen to or learn, so I'm glad you guys are here, and I hope that you guys get something out of it. So I'm Tierra Bonds with Take Charge Consulting, and I help professionals and entrepreneurs and artists leverage credit to their advantage by providing credit repair and credit education. So one of my favorite things to talk about is credit. And so I'm happy to be here and do that for you guys. Like Jay said, feel free to post questions in the chat. I'll do a quick pause after each slide. But then also, if you want to come off mute to ask questions, just save those to the end so that we can stop the recording and go from there. So thank you guys for being here. All right, so this is Credit 202. This time last week, we did Credit 101. And the recording is posted on the Seattle Public Library's website. So if you didn't get a chance to see that one yet, I definitely recommend to go back and catch up there. Today, we'll be talking about what your credit score means, so how to figure out what it is and what does that even mean, how much your credit score can cost you, understanding your credit report. So we will go through each component of a credit report so that you can see the different areas and understand how to read it. And then we'll end with cleaning up your credit. So if you have negative items that you found while reviewing your credit report, what are the steps that you can take to attend to those? Okay. So the first step in all of this is to check your credit. There are 3 credit bureaus: Experian, Equifax, and TransUnion, which is perfect timing for the question in the chat. What's the difference between the 3 bureaus? So they are private entities, they're private companies. They are, all of their job is to report information to our credit reports. That's their sole job. However, because they are private entities, they can report different accounts and different updates to your credit report. So it's important to check your report with all 3 of the credit bureaus because chances are they probably are reporting different information. And then you want to check your credit report very often. There's a really common company called the Annual Credit Report, where you get 1 free credit report a year, which is a great service. However, with identity theft and scams and all the types of fraud, it's important to check your credit much more often than once a year. So I recommend at least quarterly, but the best would be to have a credit monitoring service that allows you to check it every month. And then they also send you updates for things that happen. So if you check it on the 1st of the month and then something happens on the 3rd and you're not checking it again, until the next month, you have that credit monitoring service to alert you of anything that's happened to your credit. So to answer the other part of that question, when to get them, get your credit report as often as you can, just so that you're able to see all of those, everything that's going on with your credit at any moment. Are there any free ones monitoring? That's a good question as well. There are a lot of free services out there where you can get that check your credit. Some only check your score, some only check your report. So you want to make sure that you're getting both, because the score is basically a numeral representation of what's happening in your credit report. So you want to have both. But I don't know of a free service that does all of those three things. So monitors your credit and alerts you of things that are happening, and then provides you your credit score from all three credit bureaus and your credit report from all three bureaus. So I'm not aware of a free service that does that. The free ones, like I said, annual credit report, you get your report once a year. I do think that they've changed that since the pandemic. You might be able to get it a little more often, but they do not give you your score. So they just give you your full reports. And then Credit Karma is a really popular one that is free, but they only use 2 of the 3 credit bureaus. So you don't get to see your scores and reports through all 3 like you should. Any that you recommend for monitoring? Yeah, so Identity IQ, which I can post in the chat here in a second, but I recommend that one. That's what I use myself and my clients use, along with the monitoring and the ability to check your report and your scores from all 3 credit bureaus. They also provide identity theft protection. So kind of like an insurance type of thing, where if something happens, identity theft related, there's like $125,000 that you can use for protection. Never had to use it, so I don't know exactly how it works, but I do know that's an added benefit. Another thing that I like with Identity IQ is they have a credit score simulator. So you can, if you're thinking about getting, paying down an auto loan and you want to see what that will do to your score, it has a credit score simulator that you can put those different situations in and then see what will happen to your score. So that's a really fun part of it too. So yes, I definitely recommend Identity IQ for monitoring. Another good one is MyFICO. So myfico.com. And the difference is Identity IQ does a Vantage score, whereas MyFICO does a FICO score. And so within each of those, Vantage and FICO, there's many different scoring models. So everywhere you go, anywhere you check your report, it's probably going to be different. But FICO, you can choose, what's my score if I want to get an auto loan? What's my score if I want to get a mortgage loan? Because all of those lenders use different models when it comes to your score. So MyFICO would give you a more accurate score depending on what you're shopping for. But overall, if you're able to look at your credit report and see what's impacting you positively, what's impacting you negatively, then you're on the right track. Awesome. And so after checking your credit report, then the question is, okay, what does this even mean? So the most common scoring model ranges from 300 to 850. And so what I have some people that will come to me and, looking for an 800 or an 850, which is great. But if anything around a 730 credit score is just fine. You'll be able to get approved for pretty much whatever it is that you need to. And of course, the higher you go, the better the interest rates will be. But around a 730 is kind of that goal that I have my clients reach for, because like I said, you'll be able to get approved for whatever it is that you need, assuming that income and other requirements are meet the requirements and the qualifications as well. So if you were here last week, we did 2 different examples of what it looks like when buying a mortgage loan with 2 different credit scores and then buying an auto loan with 2 different credit scores. The information was just from a website online called Self Lender, which is great information, but it was a little dated. So recently, I wrote an article about the racial wealth gap. It was published with South Seattle Emerald. And my goal was to identify how much your credit score can cost you when buying a home right today in today's world. And so this was written in January of 2022. And the only thing different in these two scenarios is the credit score. And so I chose these two credit scores because the average credit score for a person of color is 677, whereas the average credit score for a white person is 734. And so again, everything else in this scenario is the same. So what I did is reached out to a real estate broker in Seattle, who told me that the average price of a home was $625,000 at that time. So I chose that number for the price of a home. And then I contacted a local mortgage lender who gave me the interest rates and other details. So with buying a house in South Seattle for $625,000, the higher credit score would be paying 3.5% in interest, and the lower credit score would be paying 4.1% in interest. And that's, less than a percent difference, but the impacts that it had on the monthly payment was, and I'm sorry, this is pretty tiny, was $200 more for the person with the 677 credit score. And over the year, that lower credit score was paying over $2,500 extra in interest. So that 1% interest cost them $2,500 a year. And that 1%, actually 0.6% interest cost them $76,000 over a 30-year life of the loan. So this is on a mortgage where they did a 30-year term, and just 0.6% difference in the interest rate, just about 60 points difference in the credit score caused the lower credit score to pay over $76,000 in interest. So just imagine just writing a check to someone for $76,000 and just giving it away. So this is the importance of credit and how your score can cost you money. And this article was written for, to talk about the racial wealth gap. But before we can talk about that, I think it's important to look at the racial credit gap, because buying a house is, a great way to build wealth. But if it's costing, people of color $76,000 more to do so, then it's pretty hard to focus on that racial wealth gap. So, and you can imagine this in different situations. Let's say getting a business loan, what those percentage differences would look like, and how much borrowing money to invest in your business can cost you. Again, an auto loan, anything, a personal loan, if you have an emergency, this is all of us, whether we're in business or not. But if we have an emergency and we have to use debt to survive or get out of it, it's important to have, a really good credit score so that we're saving money on the loan or the debt. Okay. So now I wanted to get into going through an actual credit report. This is with Identity IQ. So I'm going to stop sharing and post that link in the chat just in case you want to pull up your score now so you can follow along. So the cost of that service, Identity IQ, is about $21.99 a month. But it does give you a free trial. So you get 7 days to try it for $1. Sorry, not free. You get 7 days to try it for $1. And what we recommend people to do is if you're not able to keep the service, just cancel it within the 7 days so that you're not charged the monthly fee. But then you can at least look at your score now, download it, save it, and then be able to understand it as I explain it. So once you get your credit report, the first thing that you'll see, and again, this is Identity IQ. There's many of different reports out there. They all contain the same information, but they'll look kind of totally different. So if you do annualcreditreport.com, they do each credit bureau separately. So you're getting one full report from TransUnion, Experian, and Equifax. Identity IQ kind of combines them all together. So you have less that you have to go through. And so the first thing that you'll see on your report from Identity IQ is your personal information. So you'll see, and can someone tell me maybe in the chat if you can see this okay, or if I need to zoom in? Okay, good. Good. If it becomes smaller, just let me know and I could zoom in. So at the top, you'll see this one says that there is a security freeze. So this is where, if you're wondering if you have a freeze on your credit report, Identity IQ will show it to you at the top. And basically a freeze is something that you can put on your credit report yourself so basically it's an added layer of protection. So if someone is trying to get a credit card in your name, they'll apply for it, and then that credit card company will see the security freeze, and then they have to reach out to you directly and ask, whatever verifying questions so that they are confirming that it's you. And this can also happen not by your choice. So a couple of years ago, I had a Target account pop up on my credit report, and they put I think it was TransUnion, one of the 3 credit bureaus, put a security freeze as part of their process. Once you get, an account that's not yours, it's just their process to go in and add that freeze for your protection, which is great. But I didn't understand why I was getting denied for a different credit card, because for some companies it will, they'll see the freeze, and if you're doing it online, maybe they'll see the freeze and then it will just automatically deny you, or they will put it on a type of hold and then try to reach out to you. And so if you're not answering those phone calls, then they just go ahead and deny it. So it took me a while to understand that the credit bureaus can put the freeze on your report for you. So this is where you would see something like that. And there are ways that you can remove it. It's a little tedious to do it, but you can remove it yourself if you want to. Otherwise, it stays on for a few years, whether you put it on or the credit bureaus. And then after that, it'll show the date of the report. And then notice how, so the left column is TransUnion, the middle one is Experian, and then the one in red on the end is Equifax. So it'll show you what each credit bureau is reporting. So it's got the report date, your name, your AKA, so just any other names that you may have used. If you're like me, my last name is hyphenated, so sometimes it's both. I'll see both of those names or just Bonds. You'll see your maiden name, any other names that you've used, you'll see that on your credit report. Date of birth, current address, previous addresses, like the last 2, and then your employer and recent employers. So that's all of the personal information that's obtained on our credit report as far as identifiers. So everything else is just account based. This section is what you see that applies to you and how they determine that it's you. So I see a question in the chat. How do you remove freeze if I put it on there because of identity theft, but can't remember how to remove? Very, very good question. I just went through this process not too long ago, but I don't remember. Each credit bureau is different. One of them, I had to send something in writing. Some you can do it, I think one of them you can do it over the phone, but I would just reach out to the credit bureaus. You can make it easier on yourself by looking at your credit report first and seeing which one the freeze is on. So in this example, this person only had the freeze on TransUnion. So looking at your report, determine which one it's on, and then just reach out to the credit bureaus directly. Their websites have great information, so you can see what their process is there. I remember one of the credit bureaus had a very supposed to be seamlessly process to take the freeze off on their website, but their website was down. So then I had to call and send something in writing. So I would just reach out directly. How quickly can they take it off? I would ask them that question too. It's a little bit of a, I like to say a bureaucratic process, as with everything dealing with the credit bureaus, to be honest. But just reach out to them, see what and again, they're all independently operated. So see what their process is, and then go from there. Sorry, I don't have more information on that. All right. So after the personal information, you're welcome. After the personal information, you'll see immediately your credit scores and then the risk factors. So it'll also show you the scale that they're using. So this is a typical model. So 300 to 850 is the credit score range. And then this person is a 663 with 2 of the bureaus, and then a 637. So again, a reason I like to see the reports all together, because you can see the differences in the scores right away, and then the differences in the risk factors as well. So, and I honestly don't know where the risk factor information comes from, because they seem to kind of have their standard languages between the credit bureaus. So, for example, TransUnion is saying one of the risk factors is the date that you opened your oldest account is too recent, whereas Equifax isn't reporting any risk factors, but chances are it's probably the same. And then TransUnion provides a little bit more information on what that risk factor means, which is great, because then you have an idea of how you can increase your credit score. All right, so the next part is all of your accounts. So we started with personal information, the credit score and risk factors, and then we get into the accounts on your credit report, starting with revolving accounts. And so a revolving account, again, is an open-ended account. So think of your revolving accounts as your credit cards. That's the easiest way to think of it. It's an open-ended account. It comes with a credit limit, and then the balances are reported to the credit bureaus based on whatever the balance is on that credit card. So you can imagine it changing every time you check your credit score. So this is typically the reason why we see our score going up 10 points, down 20 points, those little minor changes. It's probably because of the balances on your credit cards that are changing. So you'll be able to tell it's a revolving account because of the account type, which is the second line. And then the account type detail shows you a credit card. For revolving accounts, the only other account type would be a retail or a charge account credit card. So this is a regular credit card. It shows what the monthly payment is at this point in time, because that's based on your balance. So the monthly payment for revolving accounts is your minimum payment. So that's the minimum payment that you need to make so that you're getting those on-time payments. And then you'll see the on-time payments at the bottom in those boxes. So you'll see that they were late about 2 times. Each credit bureau is reporting 2 30-day late payments down there. You'll see the month of the late payments are different, which is a great tip for if you're wanting to dispute these late payments. So you're not disputing that you weren't late in 2021 as the credit report shows, but you're disputing that it's not being reported 100% accurately, because the top row is TransUnion. And so they were saying that you were late in March of 2021, where in that same month, Experian is saying that you were on time. And then also that same month, that bottom row, Equifax isn't reporting anything. So little things like that, which we'll talk about at the end of this presentation, are what you can use as evidence that the account isn't being reported accurately. So that is a perfect example of that. And then also in the revolving accounts, you'll see your credit limit, of course, your balance, and then what else is important? And the date opened is really important, because that's what's counting, playing a factor in your average length of history. All right. So after revolving accounts, you'll see your installment accounts, which are basically your loans. So anything that has a fixed term, a fixed monthly payment, and a fixed loan amount. So again, so this one is a student loan. So the fixed term, you'll see where it says number of months is 120. So this is a 120-month term. You'll see the monthly payment right now is 0, probably because this person has it deferred, which even though it's deferred and they're not making any payments, it's still showing, you'll see at the bottom, those on-time payments each month, which is really, really good for your credit score. And then you'll also see the balance. So that's kind of what's remaining on the account. So that's it. So other accounts you would see under installments are your personal loans, your mortgages, your auto loans. Again, anything with a fixed term, a fixed amount, and then a fixed monthly payment. Those are kind of the basic identifiers of an installment account. Okay, so then after your installment accounts, these are where you'll see the collections and charge-offs. These are what we really want to get off of the credit report, because they are, if you're wondering why your score is low, it probably is mainly due to the collections and charge-offs. So the name of it at the top is very important. So that is either the creditor or the collection agency that has that collection account. And if it's a collection agency, you'll probably see 2 names. So this one, the first name, IQ Data International, is the collection agency. And then in parentheses is the original creditor. So Ptolemy Cove of Washington, which is an apartment complex. So that means that this person had a bill with Ptolemy Cove, or they didn't, and it's being reported 100%, like very, very inaccurate. And then Ptolemy Cove sold this account to IQ Data International. So now they're the collection agency that is reporting this account on the credit report. So if you see the same account again on your credit report, either with a different collection agency or just with Ptolemy Cove, then that means it's reporting twice. And that does happen quite often. So make sure that if it is a collection, it's only being reported on there once. So pay attention to the collection agency name and the creditor to make sure that it's the same account. And then for the reason you'll know it's a collection or charge off is because of the account type. So it says collection, the account status says derogatory. So those are, and then also the payment status says collection charge off. And so sometimes they might be reported a little bit differently, but if you see either of those in the account type, account status, or payment status, then you know that it's a collection. And then also the fact that it has a balance and it's not an open account. So that's a for sure way to let you know that it is a collection on your credit report. These are very, very important to pay attention to because a new collection or charge off on your credit can drop your score about 100 points. So, and there are things that you can do to try to remove it from your credit report. The obvious thing to do is to pay it, but that does not help your score because the way that the collection is factored into your credit score is just because of the payment status. So this is part of that, part of your payment history, which is 35% of your score. And so they aren't impacting you there because you're behind $6,000 in payment history. They're impacting you because it's not paid. So, and even if you pay it, it's still going to report as a collection or charge off. So the balance doesn't play a role into your credit score because it's just worried about the payment history. So even if you bring this account current, it still has the negative payment history. The same as with late payments. So in that revolving account that we saw, there was late payments back in 2021, but then they brought it back current, but those late payments in the past are still impacting their score. So collections are a little bit similar, as in even if you bring it current, you've already defaulted on it and we're going to negatively impact your score until that falls off. So if you do have collections charge-offs, I'll explain how to work on getting those removed, but paying it will not help your score. So if you take away just one thing, that would be the thing that I recommend, because I get a lot of people that come for credit repair after they've paid, debts and collections that are on their credit report, working multiple jobs, saving lots of money to pay their debt because it was their debt, and then end up in the same situation, still have, a 600 something credit score and can't get approved for their home. So that would be the one thing I recommend as a takeaway, if it's only one. That was my question. Okay, great. I'm glad I answered that. If anything else comes up with that, just let me know. Okay, and then the second to last thing is inquiries, which after this is just the creditor contacts. So it just compiles all of the accounts that are reporting to your credit report and then their phone number and addresses. So, but before that is the inquiries. So you'll see a list of inquiries. The only ones that matter are the ones within the last 12 months. So they'll show on your credit report all of the ones in the last 24 months, but the ones impacting your score are in the last 12 months, and the ones that are hard inquiries. So this bottom one we see on this credit report from On-Site Manager, the second column you'll see is the type of business, and it says tenant screeners. So that one we know is a soft inquiry. So that one is not impacting the score. And then also the date. So this report was pulled in, oh, actually that one would be. So this report was pulled in, this report was pulled in June of 2022. So the 2020 wouldn't impact their score anyway. But if it was more recent and within the last 12 months, then we would just want to look at the type of business to see if it was a soft inquiry or a hard inquiry. And so soft inquiries are anything that is kind of for background purposes, like this tenant screening one, whereas hard inquiries, you'll see the Capital One Auto Finance, the type of business is personal loan companies. So that one is a hard inquiry because you're applying for to borrow money. So those are the two differences. But again, you will see all of the inquiries in the last 24 months on your report, but only the ones in the last 12 months impact your score. All right, and then again, after the inquiries is just that bottom part of the report with your creditor contact. So if you ever needed to use this process that we're talking about here, then the addresses and phone numbers would be at the end of your credit report if you're looking at Identity IQ. So one question in the chat, total of all balances or revolving accounts is too high. Should I try to use just how many credit cards I pay off each month? I'm not sure I understand the question. But let me try again. Total of all balances for accounts. Okay, so that looks like it's one of the risk factors from your credit report. Is that where you're seeing that? Okay. Okay, great. So for people watching the recording and those here as well, the question is, when we looked at those risk factors, this person is seeing one of the risk factors say total of all balances or of revolving accounts is too high. So that risk factor basically means that your credit card balances are too high in comparison to your limits. So basically means that your credit utilization, lowering your credit utilization will help out with your score. And to do that, and you can figure out what your utilization is by adding up all of your credit card balances and dividing them by all of your credit card limits. So you can do it for each individual card, but your credit score combines all of them together. So if you've got two credit cards with each with a $5,000 limit, then your total available credit is $10,000. And so what you would do is add up your balances between those two cards and then divide that by the 10,000 to determine what your utilization ratio is. So we want our usage to be under 30%. So if you're getting a risk factor saying the balances of the revolving accounts are too high, it might be whatever percentage they're using, but it's probably a high percent of your utilization. So lowering that would really help out with your score. And then should I try to use just how many credit cards is ideal I pay off each month? So the number of credit cards, let me know if I'm answering this, if I'm answering the right question, but the number of credit cards that you have does not impact your score. It can be beneficial because it provides you with more available credit. So if you're getting a risk factor that your balances are too high on your credit cards and that's all you're able to pay, getting another credit card to increase your available credit limit and keeping that one at zero will help out, will lower your utilization. So there is no ideal number of credit cards, just I like to say as many as you can handle is the first question for yourself, and then whatever gives you the most available credit to help out with your utilization. And paying them off each month, I think, is the third question there. Of course, a great idea. I am not a fan of interest at all. So if you're able to, And when it comes to credit, I think this is where that the myth comes that credit cards equals debt. It doesn't. If you are using your credit card within your means and paying it off every month, there's no debt that you're paying. However, there are, of course, instances where you might be investing in your business or investing in yourself and need to lean on not lean on credit, but use credit and pay it off over time. But if you're able to, of course, it's ideal to pay it off each month in full so that you're not paying any interest. Does that answer those questions in the chat? Awesome. Awesome. You're very welcome. So the next part I wanted to get into is the steps to repair your credit. And this will be the last part of the presentation. The main thing to note here, again, sorry, I'm repeating myself, but paying the collections on your credit report does not help your credit score. So fortunately, there's things and steps that we're able to do to kind of get around that. But if you do see a collection on your credit report, your options are pretty limited. So you can just ignore it. And so it'll stay on there for the statute of limitations, which is 7 years for most states. So you wait 7 years and then it will fall off of your credit report. You can pay it, but it's still subject to that 7 years. So it'll still stay on there. It'll still impact your credit. The third option is to dispute those accounts on your credit report. And the reason that we're able to do this is because of the Fair Credit Reporting Act, which allows us as consumers to dispute anything on our credit report. And it requires the credit bureaus to report 100% accurate information. And when we were looking at the credit reports and even, look at your own and see those inaccuracies, they're not reported 100% accurate. I haven't seen one report in 5-6 years where it was 100% accurate. And again, it's not saying that the accuracy is in you owning that debt. The inaccuracies come into how it's being reported. So this was put into place for consumers, so that the credit repair agencies don't have, full control, because they can be not on our side. So credit bureaus get paid to report information on our credit reports, and they also get paid for subprime credit score. So their goal is not to help us with our credit. And so the Fair Credit Reporting Act allows us as consumers to have some type of action when it comes to items on our credit report. I see a question. So how do we pay our debt and build credit? If you're talking about debt as in collections or charge-offs, you can do both. Okay, yes. So you can do both. You can pay collections that are on your credit report and then focus on other areas of your credit report to build. But just having a collection on your credit report, it's almost no way you can be over a 700, I would say. So you can only get to a certain point in building credit if you are paying off collections on your credit report until they fall off. So the best thing to do, and what I recommend, is to focus on the repair. So focus on removing those collections and charge-offs and late payments from your credit report, while also focusing on the building credit. So the repair and the rebuilding are those two things that you want to kind of use in tandem to focus on increasing your credit score. So, and in the next session next week, we'll talk about the rebuilding side of things and the building if you're just starting out with credit. But the repair, the first step is getting your credit report, of course, and analyzing it for errors on your credit report. Awesome. Awesome. I'm glad you will be there. And everyone else, again, next Tuesday at the same time, we'll go through the rebuilding side of things and then also business credit too. So, but when it comes to the repairing, get your credit report, look over it for errors. And you're first looking for things that are not yours. Those you want to take care of first. But then the third part is to look over it for any negative account. So negative accounts being collections, charge-offs, late payments, bankruptcies, anything that's negatively impacting your score. Whereas if it was removed, then your score would be in a better place. You want to identify what those are and then create a game plan to work on disputing those. And so, oh, how can we get our report? No, don't be sorry. No, very good question. I did post it in the chat a while ago. I'll post it again just in case it's not there for you anymore. So again, I recommend Identity IQ just because you're getting your report through all 3 credit bureaus and because we just went through it. So now you're an expert at, at reading it. But you're able to see your credit report between all 3 credit bureaus side by side and then identify those inaccuracies because you might know that your account was, the date opened is incorrect. If you're just looking at it from one credit bureau, you can identify that that's wrong, but most likely we don't remember those types of details. So if we're looking at it between the 3 credit bureaus, then we might not know the exact date, but we know that it's not April 1st and April 8th, as 2 of the credit bureaus are saying. So something is wrong there. So that's why I recommend Identity IQ. The other option for getting your report for a free route is annualcreditreport.com. But again, you get 1 free a year, although I think they are still doing multiple. You can get it as often as you'd like because of the pandemic, but I'm not sure 100% on that. But for a streamless, time-saving process, I recommend Identity IQ. Which one is that? So the one in the chat is Identity IQ that we looked at earlier. The other one is annualcreditreport.com, and I'll post that in the chat also. So with annual credit report, you can get each report from each credit bureau, but you have to do it separately. So you'll get, and credit reports, just to give you an idea, can be, especially the ones through annual credit report, can be, like 15 to 30 pages. I've seen more also. And so you're getting that from each credit bureau. So it's a lot to go through. It's helpful, but just a little more time consuming. But those are the 2 options I would recommend, Identity IQ or annualcreditreport.com to get your credit report. But if you find something else that you're able to get it, that gives you your score and your full reports, and you're looking at Experian, Equifax, and TransUnion, then that's perfect for getting your credit report. So once you look over it, you're welcome. Analyze it for those things that are causing a dip in your score, create a game plan to work on disputing those. Then you go into the actual disputing. So what that looks like is writing letters to the credit bureaus, putting it in an envelope, putting in a stamp on it, and then sending it to the credit bureaus. So please do not dispute online. You can get, some great results with that, but most of the time, no. And the reason is because when you dispute online, you'll typically get a response back pretty quickly saying that we verified this is accurate, investigation complete, things like that. But under the FCRA, the credit bureaus have to reach out to the original creditor and or the collection agency and get the documentation that they need that shows them that they're legally able to work on your credit. And so if you're getting a response back in 24 hours, chances are the credit bureaus did not reach out to, I don't want to say any specific names, but they didn't reach out to the medical provider that's reporting that collection on your credit report. There's almost no way that they did that in 24 hours. And so the FCRA gives the credit bureaus 30 days to reach out and do what they need to do and either verify the account or delete it. And so when you send the snail mail letters, your chances of getting a real full investigation are more likely. And that's kind of what you want, because within that 30 days, it's very, very common that the credit bureaus aren't able to get the information that they need that verifies the account is accurate. And so you send them the letter. They may or may not send you a response back in the mail. Prior to the pandemic, we got responses all the time, but now what we're seeing is that they will get it and acknowledge our dispute letter and, you know, make some changes on the credit report or remove it, but they won't always send you a letter in return. So don't wait for something back from the credit bureaus in order to keep going. But the FCRA gives them 30 days. So what we do is give them about 40 days, you know, time for our letter to reach them, and then time for them to make the changes. Fingers crossed that it's a deletion. But then after that 40 days, we go in and look at the credit report and see what has changed, what we got deleted, and go from there. So definitely something that you can hire a credit repair company to do, but also something that you can do yourself, just by following these steps. The biggest thing, like I said, is to not dispute online or over the phone. Doing it through the mail is what's most effective. And then the second tip I would say is to follow up and be persistent, because you may get a response from them that says, we verified this, and they'll send you your report and it is official and it looks like they've done their investigation, everything is fine. And they send things like that because most consumers will just stop there, and stop disputing on those accounts because they've got an answer and that's it, in their eyes. But most times it is a back and forth with the credit bureaus. So like I said, just follow up and be persistent. And then the other steps to that is the rebuilding part of things. So creating a rebuilding plan, and executing that, which we will be talking about next week, because I don't want to give too much information and it's not, and it doesn't go anywhere. So I hope that this was, you know, just enough that you can understand how to read a credit report, and then get some steps on repairing your credit. If you do have more personal questions that you'd like to talk about, or, you know, walk through your credit report together one-on-one, thanks to the Seattle Public Library, Jay Lyman and Elizabeth, we are doing complimentary 30-minute consults. So it's a virtual meeting with myself, Jay and or Elizabeth to take notes, but super intimate, super private, where you can ask those questions specifically on your business. And this is something that my company provides to the public for $269. So super, super helpful for Seattle Public Library to offer these complimentary. So Jay just posted that in the chat. December 1st is what we have available now, but definitely recommend to get on the wait list, and see if we're able to help you that way if there's nothing, if they do fill up. So take advantage of the wait list. Yes, Seattle Public Library Foundation. Thank you for allowing us to be able to provide those. And then the last thing I wanted to share is the another bonus for the library, and you all here, and those watching the recording too can take advantage of this. But so basically, when we the first steps, I'm going to go back, sorry. the first steps in repairing your credit is kind of analyzing it. So what's going on with it? Which ones are impacting me? Which ones do I obviously not want to dispute because those ones are helping me out? That's kind of the first steps when it comes to the credit repair process. And so we will help you with that step. This is something that we do for our clients, is create a credit analysis, which details everything that's going on with your credit and helps you in those beginning stages of disputing. So all you have to do is get your credit report from Identity IQ, email it to myself, tiarabonds@takechargecc.com, and make sure that you use the subject line bonus for Seattle Public Library. And then we will email you that credit analysis. So what I would recommend is doing this part first, booking your appointment so that you have it secured. But before coming to the appointment, doing this so that you have your credit analysis and you can use that to determine how we want to go about the 30 minutes together, and see what makes sense to you and what doesn't. And then I can help you with the next steps in repairing
Tara,
or just increasing your credit score. Yes.
Tara, can you show us how to download it? Like, I tried saving mine and it looked like it was gonna download as an HTML, but normally, I don't know, is that what we want to do? Can you just go back to it if you have yours up, like how you could download it?
No, that's the right step. So within Identity IQ, there's a button to download it. I have not been able to open those for some reason. I know that there is a way, I just haven't figured it out yet. But when I download it on my computer, that way it works. So what we've been doing is if I'm not able to open it, then I will just respond to that email, get your login information, log in on my side, and then download it to my computer, because then I can see it that way. So if I don't have a solution to opening the HTML, then that's the route that we would go.
Oh, okay, super, thank you.
Yeah, of course, of course. But that is it that I have. I want to open it up for questions. But we can stop the recording first if anyone wants to come off mute and not be on the recording. Otherwise, you can post it in the chat as well.
Thank you, Tiara.
Of course.
Well, I think we probably should come off the recording.
Yeah.
So I want to send a thank you to our interpreter. Thank you so much. Thank you to our those that are doing captioning for us today. Thank you so much. I will turn off the recordings but let's leave the let's all come back into the main room. I'll turn off the interpretation, and I just want to check in with anyone that might have been using the interpretation or before we let our interpreter go. So I'm turning off the recording now.